Hello and welcome back to the complete scalp trading course by Wealthy Education. In this video, we'll begin Module 2, Profitable Scalp Trading Strategies. This video looks at understanding support and resistance. This is, without a doubt, the most important part of technical analysis. Support and resistance can be thought of, quite frankly, as where markets are supporting price and where they are resisting going. So this would be your support and this would be your resistance. In other words, people are willing to step in and push higher here, just as sellers are willing to come in and push lower, or at the very least, buyers are not as aggressive here. So as I've drawn this here in the pound yen with these two lines, this is basically like 163 and 190. And you would say that there is support at 163 yen. There's resistance at 190. Pretty straightforward. And you can see this by looking at charts over a longer period of time. It's a little easier to notice than short term, but we will take a look at both. You can click on this line tool over here, and you want the horizontal line. And what you're looking for is an area that seems to have a lot of buyers at, like right here. But notice something. Over here, there's a lot of sellers. Notice that we have sliced through it a couple of times. It doesn't, it's not like the wall of death. It's not that you can't go through it. It's just that traders are attracted to it. I would also point out that a lot of times big round figures tend to attract a lot of attention. So you can right click, put on settings. In this case, I would just put 150. This is a weekly chart. Like I said, we'll get to shorter term. But this is an area you think would capture a lot of attention. And clearly buyers have come in. And probably down to about 149 yen. And that's not that uncommon for there to be more or less a zone where people are willing to step in and pick up, in this case, the British pound against the yen. If you draw these lines at big round figures, a lot of times you'll start to notice a pattern. So in this case, since we're on a weekly time frame, you can see 140 has seen buyers come in several times. It even offered a little bit of resistance, so it's been support and resistance. So, why is it important to know these things? Well, it is more or less a guideline to where the market may react. Doesn't mean it doesn't have to. But notice market memory. There were a lot of sellers there. We got up there and pulled back right away this past week on the chart. Is it, knowing that there were a lot of sellers there, is it a huge surprise to think that somebody might be selling once we get back there? Well, of course not, because those orders are still there. So that's the idea. You're looking for places to look for buying or selling opportunities. And in fact, you're going to be hard pressed to find a technical, meaning like a chart-based system that isn't going to be based around support and resistance. That's almost always your first step. Another thing that I would perhaps suggest is that one of my favorite visual aids for support and resistance is that of a high rise. This is the first floor, this is the second floor, third floor, and so on. Well, if you're on the first floor, there's an area of resistance. That's your ceiling. That's where the sellers are pushing. But if you jump up to the second floor, this ceiling now becomes your floor. If you jump up to the third floor, that ceiling now becomes your floor. If you drop back down to the second floor, this floor is now your ceiling. And the reason is order flow. There's buyers and sellers there. So for example, there may have been people watching all of this, and when it came back at this point, they bought because they realized, hey, there's a lot of buyers there. There may have also been people who had sold this down here thinking that there was going to be a big breakout. And now that they're close to break even, they're willing to buy the position back at either a small loss or break even. That's the thing about trading. It's all psychology. So let's take a look at, say, the 15-minute chart. I'll go ahead and put a support line on. You can see that there had been buyers there. Notice that we had tried to break through here multiple times and sold off. So you click on this line and you can drag it by the bubble and you kind of see what you come up with. Well, obviously there's something going on there. Looks to be more or less a zone. So what you're looking at is where the buyers and sellers have come in. And these are, you think of this as a roadmap. So what I suspect is there's an entire area of selling up there, and that's why we can't break out. That being said, you don't simply take a trade based upon just because it's there. Some people do, but then you look for price action or an indicator or something. So the way to think of it is, so let's just say we're trading Ethereum. So a way to look at it would be, let me go ahead and add that volume on again. Okay. So the way to think about it is you want to maximize your possibilities and you want to recognize where markets may or may not be willing to go. Notice that we pulled back from there, and notice later when we came back towards that area again, we bounced again. So if you had this line there from previous action, you know that once we break out and we come back, there should be some people interested in buying down there. And there is a candlestick here. Go ahead and hide the volume for a second. That could technically be thought of as a buying signal. Either way, it's an area where you start to look for a trade. There's a pattern here that bounced from there. You can see that there's clearly some resistance there, at least in this area here, and we broke out from there. So what you're looking for is you're looking for a place to get involved in the trade where buyers and sellers are. It's probably the simplest way to put it. Let's go ahead and pull up a stock here. Let's go Boeing. Now, you should probably do top-down analysis if you're going to do support and resistance. Because it's one thing for there to be support on the 15-minute chart. It's an entirely different thing for there to be support or resistance on a daily chart or a weekly chart. You can see that there were several times where we could not get above like 225 would be my guess. Well, that probably means a whole lot more than just a little area like that. And it's not to say that that can't be traded, but you can see there were bigger profits to be made. So again, all you're doing is you're looking for areas where the market flips, if you will, flips from one side to the other multiple times. Most of the time, it's going to be around a big figure. So in this case, your big figure is the 192 area. And again, like with all things technical analysis, if it appears like on a monthly chart, it's a lot more important than on a 5-minute chart. However, when you look at this and you see we finally broke through that is a sign that you could be a seller. And notice how we broke through it and we came back to retest it and then failed. That in and of itself can be a trading strategy. You get an area of consolidation. You break through support or resistance. In this case, support. You come back, you test it, you fail. That is a confirmation that you're breaking down. Same thing would apply to the upside. So you want to pay attention where the buyers and sellers are, because otherwise you're just kind of guessing. One way to think about this is more or less like signposts on a highway. We will certainly use this probably in every video between now and the end of this course, or close to it. And in the next video, I'll actually go through some trading examples that you may have used this for to profit on short-term charts. But by all means, if there's only one thing you do after all of this, I would highly encourage you to go, start out easy. Start out with the weekly charts. And, where have the buyers and sellers been? Where have the buyers and sellers been? You can see buyers and sellers there. And you notice how I'm way zoomed out. And then you go to the daily chart. And then you kind of mark that up. This is an area that seems to be a bit difficult to get through. And then by the time it's all said and done, you have multiple lines. Now, again, you put more faith in a weekly support or resistance level than you do a 5-minute. So that's why the best way to trade it is to look for like a weekly support level or a daily support level, and then use the 5-minute chart at that point in time. You don't always get that opportunity, but the great thing is it applies in all markets, so it really doesn't matter. Okay, so again, the next video will be examples of scalping with support and resistance.